Hello traders and welcome to the weekend edition. This video is good through Sunday, February 5th, 2012. My name's Dez, Senior Analyst, also President and Founder of FreeTradingVideos.com Incorporated, doing business as Grok Trade. And taking a look here at the markets, check this out. The S&P daily, we were fighting with this big trend line, boom, broke out over the top of it. On the weekly chart, you can see that we now have made a decisive move above a major trend line that goes back till 2007, gang. 2007, down here 2011, 2012. We are breaking out. Now on the weekly chart, an area of resistance I want to bring attention to is what we were seeing back in the summer. We saw resistance back in the summer around 1344, 1345. That's right where we're at right now. So that is an area of resistance that proved to be major resistance last summer, and we are there now. Furthermore, it proved to be resistance back here in the beginning of 2011. So we hit that area, we dropped, hit this area, major drop. We hit this area again for a third time. The question is, can we get through it? So you heard it here. Watch that number, 1344, 1345 area. On the monthly chart, what's interesting here is we have a major trend line. We did break over the top of it. We have their shadow minor trend line coming down right here, and that's about where we stopped. We're at that 1344, 1345 area. So again, we're not out of the woods yet, because this area could prove to be the high and drop, and this would be nothing more than an upper shadow, just like it was right there. So we're not out of the woods. We are needing to watch this pretty closely. On the Dow, we did make a 4-year high going into Friday, and what's interesting here is we are in a big nasty rising wedge with a bearish divergence on the MACD. We need to get beyond this trend line. We need follow through going next week, or we're in a lot of trouble. On the weekly chart, all looks well. We've popped up. We're knocking at the door at 13,000. On the monthly chart, we do have a major area of resistance. So here we have support. We're at that resistance line now, and furthermore, we're right here at this area. So we're just a tad above it on the monthly, but the month's not over yet. But the last time we visited this area, we crashed down. And if you go back here, last time we visited here, and this was back in 2008, we hit this area, crashed down. So this line coming across, we hit the area right here, 2011, and crashed down. Now it's 2012. We're at this area right now. What will happen? So for all you bears out there, you're probably licking your chops saying, yeah, we're poised to drop. But you're having your lunch is just being eaten the last few weeks here, last few months. You don't want to be early to the party. You have to trade what you see. Right now we have a big up leg. So do not be early to the party on the bear side of things. At this moment, I am long this market, but I'm very timid at this area of resistance where we're at here. So what you want to do is start playing scared, meaning that you want to start preserving profits that you have, be looking at hedging strategies. Teachmetehedge.com. And let's go here to the NASDAQ. Let's go to the daily. We're at an 11-year high here on the NASDAQ. NASDAQ is on fire, busting all sorts of resistance, launching way far from the moving averages. And price action can only do that for so long before it will want to pull back to these moving averages. So we are pretty extended here. Let's see what happens. See the gap here with an open window? This is more for you advanced traders out there, but we do have a gap up with an open window. If on Monday we get a gap down with an open window, all bets are off on the bull side. Be looking forward to a major sell-off taking place. on the weekly chart, we have this big trend line. We're just barely above that right now, and that line goes back a little. Oh, I need to actually tighten that on those guys. So now let's see where we're at. Yeah, so we are above that. Looking pretty good. Let's see if we can stay above that and keep going northbound. But we're extended number of weeks here, gang, overextended, to say it mildly. And we are at an area of resistance, a tad above that 2900 area. If we do start to drop here, this could be a big nasty double top, but we really need to clear this. I'd like to really clear this 3000. I think that would be good. Russell's monthly chart heading up, busted major resistance, not too shabby. On the weekly side of things, very extended and launching higher here. And then on the daily, we're just going higher, 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 extending away from the moving averages. On the banks broke an area of resistance. We broke that resistance and an area of this 1750 we're looking at. We're above that. That gives me hope that the bulls are not done yet. If the banks can stay strong, the markets will stay strong. If you look here at the banks weekly, we're breaking an area of what I thought was going to be resistance, heading higher, but we have the 200-day moving average coming down that can act as resistance. And on the monthly chart, we've dropped, we've rallied. We do have the falling 50-month moving average coming here. Major area of resistance at 1845, and that we're getting close to that area right now. VIX, gang, is at 17. That is low, 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 low. I mean, last time we were at the 17 level, the markets fell apart and the VIX shot up to almost 50 at one point. Got down here as low as 15s and shot up to almost 50. Now we're down here at 17 again. The VIX is low. Time to go? Maybe, maybe not. So be watching that. Now, as far as gold is concerned, here's the monthly chart. We did a decisive bounce off of this area of support on this monthly chart, but the area I'm watching for is this 171.37. 171.37. 171.37. That's the number. We need to get over that to sustain this upward movement in gold. The weekly chart, we have this bullish pennant that's breaking out, so that looks really nice. And on the daily chart, we had a nasty little reversal on Friday, a 2% drop, which is not that great. But we've been busting all through a lot of resistance. Now we're cracking back down through a support level. So that's where we're at there. When it comes to the dollar's been crashing down, which has been helping the markets. But the question is, are we at a support area at this 21.94? $22 area? If this is going to act as support and this starts to rally higher, then the markets are going to be under significant pressure at that point. So we go higher, lower, and we're just looking for a higher pretty soon here. And on the monthly chart, this actually looks more bearish than bullish, so it looks like we have a lot of downside potential here. If this does start to break down here on the monthly chart, the markets could rally and strong. Unemployment rate has dropped for the 5th month in a row. It's down to 8.3%. A lot of you bears out there saying, well, it's you got to measure participation also. Hey, fair enough. Big news, IPO, the mega IPO is going to be Facebook. They did come out with the ticker symbol F as in face, B as in book. FB is going to be their ticker symbol, and that should be a fun one when it's open for us to trade. And we're doing a course. We have Mark, the Meerkat Suffering, teaching a free online course. So I'd get signed up for that. That's coming up Wednesday at 9 p.m. Eastern Standard Time, 6 p.m. Pacific, and all you have to do is click on the events tab and for February for this Wednesday, I think it's the 8th, and get signed up for that. And if you can't make it, as long as you get signed up, we'll make sure you get a recording. So I hope you can join us. Take care, safe trading, and thank you for sharing us with a friend.